So today was CPI day. Literally the reason why I don't like to trade on days that you have news related events because it was just a complete whipsaw today. It literally took my money out both sides if I went for the buy. And also when I went for the sell, I ended up with both losses. And honestly, it's looking like if I continue this losing streak that I'm showing you, this account is just gonna blow. But I'm still gonna be transparent and show you the account while it's trading along. And I'll show you what happened today. And I also have a visual representation of what it looked like trading CPI today. And I'll show you that first. So this video literally is what it looks like trading the CPI today.
So we said,
What's that? Big.
they do it.
Oh, yeah, it's look big one, man. I'm really fine. Leave me alone. Look, I click my leave me alone. I click
Bye.
Right? So basically today we had CPI news. CPI news was kind of bad, and I'll show you that. But let me show you how I traded the market today using the dollar as well, and it still proved to be like unsuccessful. So the first trade was at 10:03. At 10:03, I entered to the buy side, so that would have been the 10 o'clock candle. So I entered to the buy side right after it crossed this level of resistance. So I'm figuring it would have used this level as support and continued. However, it found a top at around 10 on the 10-10 candle and then started to reverse. And then it reversed right back down to my stop loss. So on the 10 o'clock candle, I entered as it closed above this level of resistance. So around 306.68. So let me draw that 306.68. And we're gonna look at what it looks like on the dollar at that time as well. So 306.68. Perfect right here. So I entered at 306.68 and this is on the 10 o'clock candle. And looking at the dollar, let's see what it looks like at 10 o'clock. And let me move my camera. Okay. So at 306.68, and that would have been the 10 o'clock candle. So you can see that the dollar was just drilling down, and bearish movement on the dollar usually means a lot more bullish movement on the QQQ. However, around 10:15, the same thing you can see here, the dollar found a bottom and the QQQ found a top. So that's where it really started to reverse against me. That's why it's good to have the stop loss, else it probably would have taken out my entire account. So on the 10:25 candle, that's when it hit me out at 305.70. So this is when it really started to go against me. And this is where it hit me out. So I entered to the buy side here above this level of resistance. And then I got hit out as it came back below that level of resistance and started to drill down on the QQQ. So that was the first trade for a loss of 21 in total. And then the second trade, I went to the sell side. And then that was where I had the dollar pushing up. However, the QQQ started to push down and then it started to reverse at around 11 o'clock, which knocked me out. So just that whipsaw effect can really damage you in the market if you're trading, especially on a news day. On news days, I just hate news days, to be honest. You have to have like tight stops, tight take profits to just take any of these moves. So at 10:45, this is where I entered to the sell side at 302.67. Okay, 302. So at 302.67, this is where I entered to the sell side. 302.67. Enter to the sell side on this candle. And then I got hit out exactly at 11.03. And that's where it really started to push up. 11. Yeah. So at 11, I got hit out at 303.73. 303.73 at 11. So this is where I was aiming for it to push down more with the dollar kind of just gapping up. The dollar just kept pushing up, pushing up, pushing up until it found a top at 11, right around the same level that it did at, what's this, 9:30. So it was the same level that it started to push up from at 9:30. That's very interesting. So it kind of made a double top here and found a level of resistance. So when the dollar began pushing up, that's when I entered to the sell side. However, when it found a top right at around 10:55, 11, and then began to come back down, that's when the market started to go against me, especially since I had a sell position there. And then that knocked me out for a loss of 22.70. And that was a total loss for today. Um, so today we had CPI, and then if you go on the Bureau of Labor Statistics, you can see that the CPI, Consumer Price Index for all urban consumers, it rose 0.5% in January. So that's kind of looking like inflation is getting a bit more sticky, which kind of indicates that the Fed is going to keep interest rates higher for longer, especially since the market was kind of predicting and more people were predicting that the Fed might pivot this year. The Fed would pivot this year if we had like inflation coming down drastically. If inflation began to come down drastically, they could start cutting interest rates. But if inflation is going to be more sticky and even gradually start to trend upwards, that's going to indicate to the Fed that they don't need to lower interest rates, not for the near term. So we're going to see the market is literally predicting for the next quarter, we're going to reach 5% interest rate. For the quarter after that, we're looking at 5.25. And then hopefully, the market is predicting that we stay at 5.25. But that's not guaranteed either, because if inflation continues to trend up, we might see 6% interest rate or even higher, because the Fed is going to use interest rates as a way to combat inflation and to just keep on beating it down. And that's not going to be good for stocks in general, especially seeing what happened today. The market saw that the index for all items, less food and energy, rose 0.4% in January. So, despite the Fed having such a high interest rate policy, we're still having inflation moving outside of that. So, inflation moving without the effects of the interest rate. And the Federal Reserve only has one tool: raising or cutting interest rates. They can only do one thing. So, if they see that it's not working, it's like a person with a hammer. Everything they look at is nails. So they're just gonna keep hammering with the only tool they have. They don't have anything that can help with the gas supply. They don't have anything that can help with food prices. But what they have is interest rates. So they can only raise interest rates and just keep raising until probably something cracks. And Jerome Powell had indicated this in a previous meeting where he said that he knows he has the tool to fix the market. So if they raise interest rates too high, they know how to cut interest rates and kind of have the market rebound violently. So he knows he has the tools to fix it. So if he kind of tightens too much until the market breaks, he knows he can fix it, right? And that's just how That's just how it's gonna go, it looks like. So hopefully we don't have something called stagflation. So this is something I also see coming up as well. People are talking about it. So stagflation is not like a recession. Stagflation is a combination of high inflation and economic stagnation. So inflation can stay up while you have like tight financial conditions. So can you imagine things are really expensive while you have high interest rates making things like loans expensive. And then businesses are in such an environment where their their costs are so high that they have to pass on the cost back to the consumer, and then the consumer can't even afford those high costs, and it's just a cycle until you reach a point where the economy just cracks, and then to spur some economic activity and development, what does the Federal Reserve do? Cut interest rates, start to employ probably quantitative easing, start to deploy money, buying bonds, buying stocks, cutting interest rates, making loans easier to get. So that's something that can happen as well. And stagflation is actually worse than a recession, because in stagflation you have high employment, high unemployment. So a lot of people will be completely unemployed. A lot of businesses cut expenses by cutting a lot of people that just don't add to the bottom end of the company. And then you have slow economic growth, so you don't have that growth of businesses expanding. So this can be something even worse than a recession if we have high interest rates and sticky inflation, right? And stagflation is also known as recession inflation. So it's like recession plus high inflation. Because in a recession, you should have prices coming down because people can't afford it. But if you have high inflation keeping prices high while people can't afford it, that's what's known as stagflation. So hopefully we don't see something like this. And for my account at least, hopefully we see more of a trending market tomorrow. We see the market pick a direction and just go with it, because those are the markets that I tend to trade better. So if the market picks a direction and just runs that way, that's where it's easy for me to follow that trend versus a whipsaw that can just hit me out at any moment. So let's see how that plays tomorrow, and I'll see you in the next video. Bye bye.